Are you looking for better results out of your options trading? I'm going to walk you through a trade that we just booked a $190 profit on a $380 investment. We took this position on SLV call options. We were in and out in 5 days. Best of all, we didn't spend more than 10 minutes a day tracking this trade from start to finish. Let's walk you through how we did it. A big issue that's facing a lot of retail traders right now is not having a methodology in place that's guiding entry and exit points. If you don't have a disciplined rule set in place, you're going to be left overreacting to every little move back and forth, every little headline that hits the tape. And you're going to be left getting whipsawed in and out of positions at the wrong times. That's going to lead to a lot of inconsistency. Instead, you want to have a system in place that outlines an exact roadmap for you. For us, we have a very specific set of criteria that we look for on every long trade, every short trade that we take. It allows us to plan our trade and then trade our plan. And that's what allows us to see much better consistency long term. I don't care if it's a different system, a different set of indicators than us, doesn't matter as long as you have a system in place that's guiding everything that you do. That way we can limit the emotional side of trading that holds a lot of people back. This is the 130-minute time frame. This is the one that we use to identify our swing trades. We classify a swing trade holding anywhere from 2 to 20 days. We're not going to get caught up in the intraday noise. This is not a day trading approach. My goal is to come in, find and manage my trades in 10 minutes a day. That allows me to get on with the rest of my day, whether it's work or family commitments, whatever it is for you. Now, when we take a look at these blue dots on my chart, before I ever pull the trigger on a trade, I know exactly where I'm getting in and where I'm getting out. My entry point is right here at this middle blue dot. This plots in real time for me. Once I hit that entry dot, I know it's time to enter my position. In this case, we went in and bought some long call options. Before I did that, I knew my target level up above, my stop level down below. Those are dynamic, meaning they change as market conditions change. The sizes of the setups are fine-tuned to the current range of the market. That way we can maximize our profit potential while minimizing the risk based on the current conditions instead of just swinging for the fences all the time. Now, when we came in and we saw this entry point hit, could I just come in and buy the shares of stock? I could. But we all love to trade options. We all love the leverage that they offer. We love the ability to come in and for as little as a few $100s, put a position on with a fully risk-defined trade. What we did here, let me get my data box up so you can see the exact entry point to the penny. Okay, I'll drag my data box over. Now, if I put my crosshairs over those blue dots, you're going to see my entry. My L entry was at 43.56. My target 45.39. Stop at 41.62. Everything's outlined for me. Now for us, instead of coming in and buying the shares of stock, we wanted to put on a long call position. Let's jump over to the trade page and walk you through it. Now we decided to go out to the monthly options. They currently have 39 days left to expiration. They had right around 44 days left when we opened the position last week. We went out 40 days. A lot of times people go to those short-term daily options, weekly options, looking for those very cheap bets, expecting those large immediate returns. The problem there, those options are cheap. In many cases, they're cheap for a reason. It's a cheap bet. You need everything to line up perfectly. You need a directional move, in this case, to the upside, and it needs to happen quickly. That's the only way you're going to make money on the trade. Now, in many cases, it's just far too aggressive. I see people putting on bullish positions based on a long-term outlook with a weekly cycle. That just doesn't match up, right? I'm looking to see what's going to happen over the next 2 to 20 days. Even though I'm in and out in 5 days, I'm still going to go out to those 40-day options because it gives me some wiggle room. It gives me some room to be wrong. Just in case I don't get the immediate move, I can hold the trade longer if needed without that time decay becoming such an issue right off the bat. So don't be intimidated by going out further in time. Don't think you have to hold the entire 40 days. Not the case at all. In many cases, we are still out in just a few days, but it gives me a buffer. It gives me a little bit of wiggle room just in case we don't get everything to fall in place immediately. Well, we came in and we bought the 43.5 calls. This position right here. We came in and we bought them for $1.93. $193 per contract. Gave me control of 100 shares of stock. It's a bullish position, fully risk defined. The $193 that I paid to open up the contract is the most I can lose on the position. If you have a bigger account, you can certainly take this with 5, 10, 20 contracts. Doesn't matter. Very liquid product. You can see the volume and open interest here. 500 contracts have traded today, 2,600 contracts have open interest, plenty of activity here. And I sleep better at night knowing I'm in a risk-defined trade. Just in case I am dead wrong, the trade goes against me, we don't see a move to the upside, I want to know what my maximum risk is right up front. Now, if I circle back over to the chart, and let me go over to that SLV chart again, notice we did hit that full target today. Once that full target's hit, I'm out of the position. I don't look at that and say, well, I still have 39 days left. Why not hold it just to see if we get a runner here? That target is in place based on current market conditions. Once that target's hit, I know I'm maximizing my profit potential based on the current conditions. And what we did here today is we closed the position out. We ended up closing it out for $2.89. It gave me a $96 profit per contract, $192 of profit if you're risking $500 per trade or less. Right? Why $500? That fits a lot of retail accounts. If you have an account size in that $5,000 to $20,000 range, we want to keep that risk small. I don't want my ability to take the next trade to depend on the outcome of one individual trade, because we don't know from trade to trade which trades are going to win, which trades are going to lose. We're going to have losses. That's part of trading. With any system on any market, you're going to have a mix of wins and losses. I want to keep my risk small so that I can be around for the long haul. I can take advantage of the numbers that my system produces over time. So taking this trade with just 2 contracts, now you're talking about $386 of risk. Very reasonable for a lot of people. It's just taking 2 contracts here. Close it out for a $96 profit per contract, $192 of profit overall. That's a 50% return on my capital in and out in 5 days. And that's including 2 weekend days there, right? So we're in and out very quickly. I book my profit, free up that capital, and I move on to the next trade. So if you're one of those people that you see the potential in trading options, but you're just struggling to see the results, couple of takeaways that are very, very crucial here. Number 1, you have to have a plan in place before you ever pull the trigger on a trade. You have to have that entry point, target, stop level. Everything needs to be mapped out beforehand, because if you don't follow that procedure, what you're going to be left with is a situation where you put the trade on without a plan in place. You have no idea where to get out. You're going to overreact. You're going to trade off of that emotion, and that's a huge issue holding a lot of people back. Next, take the monthly options, or at the very least, the weekly cycles that are out in the 20 to 40 day window. I prefer on my swing trades to be closer to 40 days. Go further out in time. Give yourself more time for your outlook to play out. That way, it's not like holding a ticking time bomb. Right? Give yourself more time for the move to play out in your favor. Are you going to give up some of the bigger profit potential? Sure. Right? We booked a 50% return. Had I taken a weekly option, yeah, I probably could have booked a 80 to 100% return. I gave up some of that profit potential in exchange for a safer position. A trade that's going to move slower helps me better control my risk. If you can follow those 2 steps right there, you are going to be so much further ahead long term. You're going to be on the right path to making consistent profits from your options trading. So really great trade there on SLV. And now at this point, if I jump back over to the chart, now I have my magenta dots setting up down below. I have an entry point right around 43.75. So I could flip right back around in the other direction. I don't care if the market moves up or down, doesn't matter to me. There's always something I can do. Does that mean I jump right into a trade now? It doesn't, because we haven't hit the entry point yet. I'm going to stay very, very disciplined to the system. That's what makes all the difference in the world long term. So if you'd like more details on how we are trading options at NetPicks, how to identify the proper call and put options, feel free to reach out. You can always post a comment here on the video, or you can email us info@netpicks.com. More than willing to help out with any questions there. So if you found this video helpful, please hit the like and subscribe button. We'd love to get you more content here in the days ahead. So I'm going to wrap this video up here. I'll be back with you guys over the next few days with our next video.
Everything discussed here is our opinion, and it is not to be taken as investment advice, because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.